Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn Associates with your agriculture update for this Tuesday, the 5th of February, 2019, just after 3 p.m. Central Standard Time. We're starting to get all the government reports coming in, commitment of traders and so on. So traders are getting a better feel for what's going on in that part. In the ag market, of course, we're still dealing with the impact of the vortex, that polar vortex that we had, what it means in the meat markets. There's still disruptions up and down. You go up 5% in pork one day, down 3% the next. That's what's going on. Tonight's the State of the Union. The dollar index won out by default against almost every currency today. I mean, I was actually surprised on that. And of course, that impacts where we're going on commodities. But a 19 or 20 point rally isn't that much. I meant the 19 in the euro falling. And as you can see, trying to trade the pound anyway is going to be difficult in front of Brexit. They're trying everything they can there to make something smooth. Energy prices backed off today again. You know what's interesting on energy? I just read that Saudi Arabia and 10 allies with Russia are going to form a new alliance. Is that the end of OPEC? There's 15 members of OPEC. They're cutting out some countries and doing something different. Just interesting to see that. When we look at the soybean market, obviously, while the State of the Union ends tonight and we get an idea by the weekend on the border wall, is the president going to declare an emergency then? I don't think he will tonight. I think he'll wait to see what the House Senate committee that does the appropriations, if you will, that they then send next week for a vote and their members to see if they'll do anything. Will that include the money? Then we've got right after that the Chinese-U.S. trade deals. These are all items that impact it. And I say the House Senate Committee for the budget because what if the president shuts down the government again? That's the only reason I'm mentioning it. I don't think he will, but it could happen. As you can see, you've backed off from that high close of 9.2525 by a nickel, but you still got upside bias in the market. You're still over the 18-week moving average of closes. When we take a look at the daily bar chart, you can see how you're slipping back. This break low today of 913.5. If we come to this break low, it was 913.25. Not quite as low, but certainly when I put on the swing line, you now have a pattern of a higher high and a lower low to this low. So it's beginning to straighten itself out. And what I mean by that is whenever you have an outside day and you take out the outside day downs high, you typically throw the chart off because you don't take out the high of an outside day down or the low of an outside day up immediately, generally within a day or two. It's after that if it occurs. Look where the market's pulling back to try to get its footing against that 18-day moving average, which I've always considered the line in the sand. I believe that moving averages are very important as they give a line of reference on the market. They help traders use it as momentum, balancing points in a market. If you get far away from it, it's just not uncommon to get back to it and fight battles at it. And you can do this over and over. You get up, take a look yourself. Does it work every time? No. I can pick right here. It just kept going. But then it pulled back and fought that. Nothing on a chart that I've seen is always 100%. I wish it were. I wouldn't be here. When you look at the Bollinger Bands, you got up to the Bollinger Band top. You know what I say. That first challenge of a Bollinger Band is where I think pros take money off the table. Now, does that mean they take all the money? I can't answer what they do as a group with all their money. But do I see this over and over? I do. I teach it over and over. You go back on the charts and you'll see what I'm getting at. It is a resistance point. That's the theory of the algorithm. Support back at the 18-day average. Momentum overbought still. Overbought, I define, is either of the numbers that make up the slow stochastic momentum indicator being over 70. Now, if they go sideways over 80, that's different. It means they converted from overbought into locking in a trend, or under 20 going sideways, they're converting and locking in a downtrend. We don't have that right here. We have a market that's wishy-washy at this point, which makes sense. We have big key government reports finally bringing us up to date from December. A lot of this is built in. I don't know that you'll get a reaction, but traders like to look at these numbers to have an idea as to where their grain stocks are and what they think. If you look at the meal market, you've gone from this high, big up high, all the way down here in an oversold condition, very close to the Bollinger Band bottom. And one other thing I've been pointing out is that generally when oil is gaining on these other markets, you don't get a lasting trend in soybeans. It can happen. There could be shortages where oil just becomes the market. But I don't see that right now. On the other hand, the market still has the embedded stochastic. It's still over the 18-day average, unlike meal, which is looking terrible down here, and on rally is going to have pretty good resistance. What I do expect, by the way, is because of the collapse down in the Bollinger Band and the rally up, probably sooner rather than later going to see some sideways action. In the corn market, it managed to get up high enough today to turn the trend. So at this point, the market turned up, and guess what it did when it finally did it? It became overbought. You got a 71 reading. Anything over 70 overbought. So again, every day, almost, you've been hitting this 18-day average. It tries to go up, fails, comes down. One of these times it won't fail up or down. I don't know where that's at. In the wheat market, we went back today, and if I show you yesterday, we had come up, challenged the, back 2 days ago, the 100-day average, the upper Bollinger Band, followed through the next day, still couldn't get through the band, tried the 100-day average. Today you come down, you challenged, as you can see, the 100-day average again, and then rallied back up and stopped against that Bollinger Band. What is the trend? Well, I still have in place a higher high and a lower low in a very overbought market in a serious resistance spot. The sugar market is trying to develop an uptrend. Can it, is going to be the question. It has the pattern of higher lows. With today's high of 1293, you certainly have a higher high. You closed on the 18-day average. I wouldn't be surprised if the pros are coming in this area of the 18-day average. They probably will blow out if you take out 1251 on this pattern and hope that they can get a rally back to the upper Bollinger Band. Let's assume the market takes out 1251 instead of anything else, just starts falling. Well, you'd have a higher high, lower low pattern, not a trend. So the shot at the trend is to the upside right now, not to the downside. In the coffee market, I still have a pattern of lower highs, and now I have higher lows. So I'm narrowing in price like this, and this is all happening against a sideways black set of bands, which are the Bollinger Bands, and that means that this market is building power for a move. Which way is going to be the question. It's going to get, if it tries the upside, overbought. That's how you come out of this. If you go for the downside to break out, right now the way that the slow stochastics are, they wouldn't get oversold a lot. Hard to tell. Again, we just keep hitting this 18-day average, and admittedly, the upper Bollinger Band, which has to give you a bent to being more bullish than bearish. Where does that change? It changes if 103.25 is taken out, because without taking out 107 first, you could end up with lower highs, then lower lows under the 18-day average, which all of a sudden puts the lower Bollinger Band into play. In the cocoa market, the market today lost its bearish embedded reading. If it does not get it back when it opens again tonight, there'll be a problem in the market, and the odds favor it'll negate this downtrend by taking out 2247 and getting back to the 18-day average. The onus is on the bears. Yes, you've got the lower highs, lower lows, but this is super important. Losing that reading, not a good sign at all. In the cotton market, there is no trend. Similar to coffee, you've got this sideways action. Suddenly, it's all happening against the 18-day average. Prior to this, it stayed away from that and would challenge the upper Bollinger Band. Didn't seem to go anywhere. Momentum had been pointing down. It's in the first thralls of flattening itself out. In the cattle market, you have a clear pattern of a lower and low, higher high, stuck in a sideways momentum here, and suddenly the last 4 days we just keep hitting the 18-day average, not doing much. Feeder cattle is very similar. Yes, this day didn't hit the 18-day average, but what about all these others? Take a look. And you're not moving to an upper and lower band. No trend there. In the hog market, you had a great day yesterday to the upside, gained on the day, if we take a look, 4.86%, and today you lost 2.3% of that back. You did not, by the way, get up and take out the highs of yesterday either. But what the market did do is, like the cocoa market, it's now losing its embedded reading. So if we come here, lost it there, had it there, both numbers were under 20, both under 20, and both under 20. So now that you've lost that, when you came up here, it would not surprise me that you try to continue the rally to the 18-day average of closes. Unlike cocoa, it's 2 days lost. Cocoa's the first day lost. Because of what the president's going to do tonight in the State of the Union, then right after that, obviously the weekend, we get to see the House Committee, and then the Chinese trade deals going to be the news of the day every day. You're going to want an idea of what's going on. Our firm, anything that relates to the commodity market, will start covering it tonight, and you'll be getting it tomorrow through our reports if anything comes up with that impacts the commodities. How do you get our research? Well, you become our client. It's included just being a client of ours. Not a client, we'd like to offer you a free trial so you see what we write for our commodity trading people. And how do you do that? Give us a call at this number. You can go to our website. You can also click up here, and you'll see our carousel. When you click on a free offers, give one of them a click, and away you go. I'm Ira Epstein. See you tomorrow.